Welcome to Hong Kong Brief. The content of the briefing includes Hong Kong's Jimmy Lai pleads not guilty in security trial. China stocks fall in post-holiday trade as economic woes persist. Inbound tourists drive Japanese department store sales to record high. Hong Kong stocks start 2024 on a weak note, extending four-year losing streak. Australian talent scheme lures 1,339 Hong Kong residents over 4 years. Hong Kong's Jimmy Lai pleads not guilty in security trial. Bloomberg. Jimmy Lai, the former media mogul of Hong Kong, has pleaded not guilty to sedition and collusion charges as his trial resumed. Lai is accused of conspiring to collude with foreign forces against China and Hong Kong, under the national security law imposed by Beijing. He also faces a colonial-era sedition charge. Lai's trial is expected to last around 80 days and is being closely watched by Western governments. Any conviction risks further straining relations between China and the US and UK, where politicians have spoken out in Lai's defense. China stocks fall in post-holiday trade as economic woes persist. Bloomberg. Chinese stocks started the new year on a decline after weak manufacturing and home sales data raised concerns about the country's economic outlook. The CSI 300 index fell as much as 1.1% and the Hang Seng China Enterprises Index slid 1.8%, making them among the worst performers in the region. The weak data may lead to expectations of more stimulus from Chinese authorities, who have vowed to maintain a pro-growth stance in 2024. Chinese stocks had gained in the last few trading sessions of 2023, but global funds withdrew $505 million from onshore equities on the first trading day of the new year. Inbound tourists drive Japanese department store sales to record high. Nikkei Asia. Japanese department store sales have reached record highs thanks to shopping sprees by tourists. Despite a decline in the number of Chinese visitors to Japan, duty-free monthly sales in November reached 39.49 billion Japanese yen, $279 million, up 2.3 times from the previous year. The weak yen has boosted sales, with tourists buying high-end items from luxury brands. While Chinese tourists made up almost 80% of sales in 2019, that figure has now fallen to 46.1%, with tourists from other Asian countries and younger consumers making up the difference. Hong Kong stocks start 2024 on a weak note, extending four-year losing streak. South China Morning Post. Hong Kong stocks fell on the first trading day of 2024 due to a contraction in Chinese manufacturing for the third consecutive month and a slump in home sales. The Hang Seng Index dropped 1.6% to 16,778.78, while the Hang Seng Tech Index shed 1.4%. The Shanghai Composite Index also retreated 0.2%. Alibaba Group fell 0.9% after being ordered to pay a rival $140.3 million by a Beijing court after losing an antitrust lawsuit. Sales of China's top developers tumbled by 35% from the previous year in December, causing China Resources Land to slide 5.2% and Longfor Group Holdings to sink 5.6%. Australian talent scheme lures 1,339 Hong Kong residents over 4 years. South China Morning Post. More than 1,300 Hong Kong residents have moved to Australia over the past 4 years under a talent scheme that offers fast-track permanent residency. Most of the migrants work in the digital technology sector. The Australian Global Talent Program, which started in 2019, offers applicants instant permanent residence if they are highly skilled and earn at least $167,500 Australian dollars, $114,500 annually in select fields. A human resources expert said that a huge talent shortage exists in cybersecurity, technology risk, artificial intelligence, and research and development in the chip business in Hong Kong due to immigration. China stocks drag down Asia as New Year starts, markets wrap. Yahoo! Asian equities have been dragged down by Chinese shares as a result of weaker-than-expected factory data and a speech from President Xi Jinping that highlighted the headwinds facing the economy. Hong Kong's benchmark share gauge slid as much as 1.7%, while its peers in the mainland and Taiwan also dropped. Meanwhile, China's factory activity shrank in December to the lowest level in 6 months, data published on Sunday showed, while a private gauge of manufacturing released on Tuesday showed a slight gain. China restores coal tariffs in threat to Russian exporters. Bloomberg. China has reinstated import tariffs on coal, potentially threatening Russian exporters who rely on the Chinese market. The tariffs were removed in May 2022 as a precaution against supply risks following Russia's invasion of Ukraine. This resulted in record imports of coal to China, including a larger portion of Russian coal that had been rejected by other buyers. However, China's policy has now shifted to protecting its own mining companies from a domestic coal glut. Russia has become the second largest coal exporter to China, with the aim of supplying 100 million tons annually. To maintain those volumes, Russian prices will have to fall. Miniso to open flagship brand store in Hong Kong for maximum retail impact. South China Morning Post. Chinese budget retailer Miniso Group is set to open its largest brand representative store in Hong Kong's Tsim Sha Tsui district next month. The company plans to strengthen its brand presence in the city as it believes there are still significant opportunities in the market. Miniso is also using various online content to enhance brand awareness among young consumers. The retailer, which sells lifestyle products, plans to operate 100 stores in Hong Kong over the next few years, and is aiming to open 350 to 450 new stores per quarter in overseas markets in 2023. Neon still has a hold on the hearts of Hong Kongers. Financial Times. The art of crafting neon signs is slowly disappearing from the streets of Hong Kong as businesses switch to LED signs and local authorities enforce rules on unauthorized and unsafe signs. Only 8 craftsmen now keep the technique alive, compared to the 30 or so who used to make the signs for shops and restaurants. Neon signs are seen as a symbol of Hong Kong's freewheeling era, and the decline in their numbers has upset locals. However, some traditional businesses and a new generation of customers are still interested in having neon signs. Bitcoin climbs above $45,000 for first time since April 2022. Yahoo! Bitcoin has reached $45,000 for the first time since April 2022, and Ethereum is up 1% at $2,376. Investors are keeping a close eye on whether the U.S. Securities and Exchange Commission will approve a spot Bitcoin ETF. The regulator has rejected multiple applications in recent years, fearing that the cryptocurrency market is vulnerable to manipulation. However, recent signals from regulators indicate that the SEC is more likely to approve at least some of the 13 proposed ETFs, with a decision expected in early January. The potential for central banks to cut interest rates this year has also helped boost cryptocurrencies, after a bleak 2022 following the failures of FTX and other crypto businesses. Wealth Management Connect enhancements to boost Greater Bay Area sales, banks. South China Morning Post. The cross-border Wealth Management Connect scheme, set to launch soon, will boost sales and capital flows between Hong Kong, Macau, and the 9 mainland Chinese cities in the Greater Bay Area. The People's Bank of China's, PBOC, Guangdong branch completed a 12-day consultation on December 12 on a range of relaxations to the scheme, including tripling individual quotas to 3 million yuan, $420,745, from 1 million yuan. The new measures will also allow securities firms to sell products as well as banks and lower the threshold for mainland investors trading under the scheme. Rising livability doesn't herald Hong Kong's return to pre-COVID normal. SCMP opinion. The Hong Kong Institute of Asia-Pacific Studies has been tracking residents' ratings of Hong Kong's livability since 2017. The ratings have fluctuated over the years due to various factors, including the anti-extradition bill movement and the COVID-19 pandemic. The latest rating in September 2023, the first rating in the post-COVID era, was 56.5 on average, indicating a new normality based on safety and stability. However, the rating has remained relatively unchanged since 2022, suggesting that more needs to be done to address housing conditions, the cost of living, the education system, and individual liberties to see an uptick in livability. China's home developers suffer further sales skid to end miserable 2023. South China Morning Post. Chinese developers are facing a challenging start to 2024 as home sales continue to decline. China's top 100 developers reported a 34.6% drop in transaction value in December compared to the previous year. This downward trend has been ongoing, with sales for the whole of 2023 dropping 16.5% compared to 2022. Despite offering discounts and easing measures, demand for homes remains weak. The sluggish performance is expected to continue, with sales predicted to remain flat or decline further in January. Moves on Hong Kong land supply step in right direction for city development. SCMP opinion. The Hong Kong government has relaxed conditions on land exchanges for the northern metropolis in the new territories, as part of efforts to boost land supply and development. Under the new arrangements, an applicant with 90% ownership of private land in a designated development site will be able to acquire the remaining 10% by compensating those affected under the land resumption law. The government hopes that these changes will speed up the Northern Metropolis project and ensure better development layouts. In addition, a pilot scheme has been introduced to charge land premiums at standard rates for converting old industrial buildings and some farmland, in order to encourage redevelopment projects. Hong Kong must defend the two systems' advantages that make it special. South China Morning Post. Hong Kong's status as a global financial center is under threat due to economic difficulties and political challenges, according to former Secretary for Transport and Housing Anthony Chung. He argues that uncertainties about Hong Kong's future and concerns about its political freedoms have led to a decline in international confidence and a retreat in foreign investment. Furthermore, Chung suggests that Hong Kong's increasing reliance on mainland China for capital and talent weakens its international profile and risks diminishing its institutional distinction. He calls on Hong Kong to balance its integration with mainland China while maintaining its own unique system and attracting a global talent pool. And that's a wrap for today's news from the 6 Degrees World. I'm Dr. Six, your resident observer, bringing you the latest updates from around the globe. Let's take a quick recap of today's headlines. Former media mogul Jimmy Lai pleads not guilty in his security trial in Hong Kong. Chinese stocks fall as weak economic data raises concerns. Japanese department store sales reach record highs thanks to inbound tourists. Hong Kong stocks start the year on a weak note. Australian talent scheme lures over 1,300 Hong Kong residents. China reinstates coal tariffs, threatening Russian exporters. Miniso to open flagship store in Hong Kong for maximum retail impact. Neon signs slowly disappearing from the streets of Hong Kong. Bitcoin climbs above $45,000 for the first time since April 2022. Cross-border wealth management connect scheme set to boost sales in the Greater Bay Area. Hong Kong's livability remains relatively unchanged despite rising ratings. Chinese home developers face further sales decline. Hong Kong government takes steps to boost land supply and development. Hong Kong must defend its two systems' advantages to maintain its global financial status. Now let's dive into some analysis. The trial of Jimmy Lai is not only a high-profile case but also a potential flashpoint for tensions between China and Western governments. Lai's plea of not guilty will undoubtedly draw attention from politicians and activists who have spoken out in his defense. The outcome of this trial will have far-reaching implications for Hong Kong's autonomy and its relations with the US and UK. Meanwhile, the decline in Chinese stocks and weak economic data are cause for concern. The expectations of more stimulus from Chinese authorities reflect their determination to support economic growth, but the impact on global markets remains to be seen. The situation is further complicated by the ongoing tensions between China and other countries, which could affect investor sentiment. On a more positive note, the influx of tourists is driving record sales in Japanese department stores. While Chinese tourists still make up a significant portion of sales, the diversification of tourist demographics is a promising trend. This indicates that Japan's appeal as a shopping destination extends beyond Chinese visitors and bodes well for the recovery of its tourism industry. In the world of finance, the rise of Bitcoin and the potential approval of a spot Bitcoin ETF by the U.S. Securities and Exchange Commission are exciting developments. The renewed interest in cryptocurrencies, coupled with the possibility of central banks cutting interest rates, could create a favorable environment for digital currencies to thrive. Lastly, the decline of neon signs in Hong Kong is a bittersweet reminder of the city's changing landscape. While LED signs may be more practical and cost-effective, the disappearance of neon signs represents the loss of a cultural icon. However, there are still businesses and customers who appreciate the charm of neon signs, showcasing the enduring appeal of the past. And there you have it, folks. The 6 degrees world never fails to keep us on our toes. What are your thoughts on today's news? Do you have any burning questions? Let's open the floor for discussion. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.